Hey, VA borrowers, my name is Steve Doherty. I'm the Raleigh VA loan guy. Today I want to talk to you about escrows, or taxes and insurance that are collected ahead of time at closing when you purchase a home and are paid for on a monthly basis if you choose to pay them that way. So there is a thing called waiving escrows, in which case that means you're not paying taxes and insurance as part of your monthly mortgage bill, and the mortgage bank is not coordinating that on your behalf. In that instance, you're responsible for renewing your own insurance policy and making sure your taxes are paid in a timely manner. So why do banks try to get you to escrow? Why do they want to control the payment of your taxes and insurance? Remember the basic arrangement of a mortgage loan. A bank gives you money to purchase your home. That turns into a loan. And the basis of that transaction, the reason why this bank is able to lend you so much money, is because your house is serving as collateral. Meaning, if you stop making your mortgage payments, eventually the bank can take that house, sell it, and use the proceeds of that to cover any loss that they have from you not making your mortgage payment. Now, we all know that's not going to happen to you, but why do banks want to control taxes and insurance as part of that mortgage arrangement? If you fail to pay your taxes, in most jurisdictions, the local county or the state can file a lawsuit against you, and they can take your home and sell it. They can use those proceeds to satisfy whatever tax debt they have. But remember, the mortgage bank is using your home as collateral. That home is there in case you don't make your payments. The bank can sell it and they can be made whole. Well, the bank really doesn't want the county or the state to step in line ahead of them and take your home and sell it and leave them with nothing in the event that you're not making your mortgage payments. The same is true with insurance, but in a different way. Again, the house serves as collateral. If you don't make your mortgage payments and the house burns down, the bank has nothing to foreclose on. The bank can't sell that to satisfy the debt. So in both scenarios, the bank says, tell you what, borrower, we're going to take care of taxes and insurance for you. We're going to collect them upfront at closing, and we're going to collect 1/12 of the premium for your insurance and 1/12 of the tax bill every single month. We're going to take care of that for you because we don't want you to get behind your taxes, and we don't want that insurance policy to lapse. So that's the basic arrangement of why you are escrowing. Again, you may have the option to not escrow. Most people do escrow. I'm a mortgage professional. I escrow my taxes and insurance. So how will that payment work? Generally speaking, at the closing table, you will pay some taxes and insurance to prepare for the next tax bill, whenever that comes due. And this varies state to state. In North Carolina, we pay our taxes annually. The tax bills are generally published in July, sometimes in August. They are payable September 1st. They are late January 5th of the following year, 5th or 6th, depending on when that day falls. And they are payable in between. They're not late after September 1st. And if you escrow taxes, your servicer will probably pay your tax bill sometime in November. That's a pretty typical time when they get paid. Now with insurance, the way this gets paid is that upfront you will pay for an annual insurance policy. So you will pay an upfront insurance premium at the closing table. Your home will then be insured for 365 days for the full year. Now, you may be asking yourself, why am I paying an insurance premium upfront and paying it every single month? I just bought a 1-year policy. The home is insured for a year. Why are you already coming to me every single month and asking for more money for insurance? The reason is we want to have the full premium recollected in this separate escrow account by the time we need to renew the insurance policy. So upfront at closing, you buy a 1-year insurance policy. That takes you from day 1 through day 365. The home is insured for 1 full year. What about year 2? Well, when we reach the 12-month mark, after collecting 12 mortgage payments, roughly 12 because your first mortgage payment will be 60 days after closing, we will have the new balance recollected, and the mortgage servicer will renew your insurance policy with that recollected premium without you having to do anything. If you want to switch insurance providers, that's something you're going to need to coordinate with your mortgage company because they are coordinating the collection and the payment of the insurance premium. This is somewhat of a convoluted topic, especially considering at closing, we not only prepare for that first insurance premium, at closing, we take a little bit of a cushion and we prepare for that insurance renewal. Taxes are similar. If you buy a home in February and the tax bill isn't payable until September, we're going to collect a little bit up front and you're going to pay 1/12 each month so that when it's time to renew or to pay that tax bill, the full bill is saved up again. Now, again, in North Carolina, that's exactly how taxes work. In other states, taxes are paid on a quarterly basis, but the same general principles, the same general mechanics are the same. If you have any questions about taxes and insurance, the benefit of escrowing, the drawbacks of escrowing, please feel free to reach out to me, leave a comment below, send me a text message, shoot me an email, send me a Red Star cluster. I'm here to answer your questions. Again, my name is Steve Doherty. I'm the Raleigh VA loan guy. I work at Advantage Lending in Raleigh, North Carolina. I look forward to hearing from you.